Hey, good afternoon, traders. This is Trader Tim from over at eminimine.com doing a Monday market analysis video. Actually, it's late morning here, doing the video a little bit early today, and I wanted to run through a handful of technical analysis fundamentals that are simple concepts, but extremely important for like your bigger picture trading. That when we talk about intraday trading, really has a strong impact on how you interpret those intraday pullbacks. So what I mean by that is, so we'll start on the daily here, just because I have the this up channel drawn on the SPY, and then we'll switch over to ES in just a second. But if you see the channel here, every time we pull back, just to the bottom of the channel, we're getting a pretty strong bounce. And so when you see those kind of patterns happen over and over again, where you have a pretty tight defined channel, you pull back to the bottom of the channel, you move to the top of the channel, and back to the bottom of the channel, and by and large, you're continuing to rise in price. When something out of the ordinary happens, such as a break below the channel or a break above the top of the channel, that's where you want to pay really close attention. So we're kind of at that point of close to breaking out above the channel. We had a little bit of poke above on Friday, and then today we gapped down a little bit, but we've been pretty much increasing, rallying throughout the morning thus far. So if we were to make a strong push above the top of the channel, then I would look for, a fairly sharp decline to the bottom of the channel. And what ends up happening, we start out pretty shallow like this with the uptrend line, and then you start to get a little bit steeper like this, and then you start to get really steep and you end up going straight up. So if we were to look at like Tesla, for example, it starts out pretty shallow, and then it gets a little bit steeper, and then it gets a little steeper, and then it pretty much goes straight up. And so we're seeing a lot of that across a handful of markets that have been really strong. The Today, probably most notably, is in the crypto space. So let's talk a little bit about the ES, and then we'll talk about some of those technical analysis pieces as it applies to Bitcoin, Tesla, some of the bigger players right now. So if we look at the ES chart, we can see, the uptrend from the low at the end of October has not taken out any swing low on the way up. So as a general concept, rather than trying to pick tops, I prefer to let the market change trend and then get in on a new short if the trend was up. So if we were to pull back to like last year in February, rather than trying to pick tops when we were up high, I would prefer for the market to come down and break a swing low and then come in, show that bearishness, and then come in and draw up my short for an entry, and then let that trend continue drawing shorts on the way down. So where we currently are here on the ES, if we start from the low in October, we've got a new high put in, and it's at that point, every time you make a new high, what I like to do is wait for us to take out that high before tightening my stop. So if, let's say, you're long above the high price, a few pennies or a few ticks above the high of this low bar here. So you're long from, we'll just say 32.97. Okay, we have, 4 or 5 days of straight up, and the stop needs to really stay below that entry candle at least on most of the position if you want to stay in this for a long time. And now this, we're talking about the daily chart on the ES, but this could easily be an hourly chart or a 15-minute chart. So whichever time frame you're trading, you can just apply this principle to that time frame. So we come up here, we make a high, and once we pull back, I don't like to bring my stop up right away. So like we make this 1-day pullback. What I like to do is let the market undulate, let it digest or pause or consolidate. And once it makes another new high, so once it takes out this line up here where we made the first high, then I can come up and bring my stop up underneath the swing low. And so at that point, the most recent swing low is right here. And so you've got this big, or this period of time where your stop is down here. Let's say you take half the position and you start trailing each candle's low fairly aggressively, and you get, the first run up, maybe a third of the position, a third, half of the position, and you get taken out here below the low of this candle. So you lock in some profit. It's essentially price could come all the way back down and stop you out on whatever you have left on the position, and then you're still profitable. So emotions are low. You're not super stressed out. But once we come up here and take out this swing high, that's the cue to bring the stop up. So we can take it from down below, bring it up here. And so if we follow that pattern, we come up here, we make a new high. Okay, here's our high. And remember, our stop is still below the low of this candle. Let the market pull back. And then when we come up and make another new high, then we can bring our stop up yet again underneath the next swing low. And this one, it was close to a double bottom. I mean, for all intents and purposes, it was a double bottom. But keeping your stop below the swing low keeps you in the long. So we came like a point away on this pullback compared to the first dip. So then same thing. Market makes another new high. We come up here. We make the high here. We go a little bit higher. And then we pull back. Well, I'm not going to tighten my stop until we come up and take out that original high. And then you can just take it and bring it up underneath this swing low. And so where it stands right now, sure, you can come in and take a portion of the position and tighten the stop by trailing each candle. But for the longer term leg, or the longer term, let's say you have 5 contracts, sure, you can take off one contract below by trailing each candle, and then you got 4 left, and then you let it do its thing, and then you get another big spike up. You can start and come in here and trail each contract, or trail each low with another contract, and maybe if we come lower today, get taken out up here. But a bulk of the position still is trailing its stop from down here. So this is the swing low that we would need to break, 36.5250, to sort of set up or take out the uptrend. And at that point, I would look for a potential short. So rather than trying to come up here and pick a top for a short-term pullback, it's great to be able to utilize a hedge when you have a big long position, but the important thing is not to try and just come in and put on that hedge just because the market is up. Wait for some kind of signal, just like you would to get into a new position. And I bring that up because we've been talking about, hedging coming into 2021, just because 2020 has been such a great year. And I just wanted to kind of clear up that you want to treat a hedge in the same way that you would treat a new position. You need some kind of entry signal. You need a trend change and to be able to put on a hedge. So I don't like to just come in and pick a top. I like to see some sort of signal, reversal signal, before putting on that short. So if we, let's go back to Tesla here for a second. We can do the same thing. Let's just start from that 400 breakout, we're going up, 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 up. Okay, here's a high that we pull back from for a couple days. And then we go up, up, up again. So let's just take our stop and put it underneath this candle's low. Okay, we go up, 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 pull back. I'm leaving the stop alone on this pullback. So this is the current high. If we pretend that we're back here. Okay, there's our high. Leaving the stop below here and letting things just digest a little bit. And then, okay, new high. Now I can take my stop and bring it up. And that will keep you in these trades a lot longer and give you a clear exit point. So then you keep going, market pulls back a little bit, and then at this point, this is our all-time, or this is our high. Yeah, that should be the all-time high too. And then we come over here, boom, we make a new high. Okay, now we can take our stop, bring it up to the next most recent swing low right here. And then you just kind of keep doing that, and you can see as we start to go parabolic and go straight up, that is a good time. Let's say you have 100 shares. That is a good time to come in and tighten your stop on take a little bit off the table, even if it's just 10, 20, 30 shares, because sometimes the distance between where your stop is and where price is, it gets pretty far away when things are going parabolic and these trend lines are just getting so steep. You start kind of shallow, like we talked about at the beginning, and then all of a sudden you're getting steeper, steeper, straight up. So it's okay to take profits. You just don't want to get out of the whole position too soon. Unfortunately, with my Tesla position, I traded primarily the options. So I kind of ran out of time to be able to hold it through this last leg up here. And that's okay. You get a lot of leverage with options. There's a little bit more timing involved with picking, the right strikes and things like that. But if you're holding the stock, there's really not a reason to panic and close out of the whole position. Just from a technical perspective, from a fundamental perspective, Tesla, there's lots of reasons to not close your Tesla position. But from a pure technical perspective, yes, we've had a 1-day dip below the low of the prior day's bar, but it's not a reason to freak out and get rid of the whole position. If you want to sell some, lock in some profits, that's great. But the swing low on Tesla, you got to go all the way back here to the low of what is called a 614 is the prior swing low. And then we can do the same thing with Bitcoin here. And I'm going to turn on the full chart. If we come back and find you can even go back super far, but we'll just go back to September. Swing low. You come up, make a high. Well, currently we'll start from this high here. So this gets taken out, 12,000 we'll call it. We break out of 12,000, and you pretty much go up, up, up. You have a little bit of a dip here, and then new high. So let's just say our stop is back here, like this. And then come up, make a new high, pull back, leaving the stop alone back here, makes another new high. So you can bring your stop up to that swing low. You get the one kind of big sell-off here in November. It was really just a 1-day sell-off. Once we make a new high, you can bring your stop up below that swing low. Even if it's not a physical stop, just a mental, okay, I want to stay with the trend. And that's really what we're doing. We're identifying where the trend is failing or changing. So you continue that process, make another new high, so your stop comes up to here, pull back. We have this 1 day here where we dipped and then went higher. So you can use that as a swing low. There are some instances, or a fair number of instances, where you typically get like 2 legs of pullback. And we can talk about that in a future video or in tomorrow's live trading session. But for simplicity's sake, that would be the pullback, even though it's just 1 day. And then, up, 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 up. Today we got a nice nice sell-off here, but this is where the swing low currently is, all the way down at 26,000. So as these charts start to go parabolic and go straight up, just like we've been talking about with the other markets, Tesla, you get steeper, 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 and then you get really steep. Well, you're going to have a kind of reversion to one of the more shallow trend lines. So no reason to panic. As long as we're above that 26,000, that uptrend line is still intact. Same thing with Tesla, holding above the, it's pretty far away, but 614, that uptrend is still intact. So you can use that kind of fundamental technical analysis to be able to come in here and determine, well, do I need to be concerned with today's price action on the ES? And when you look at the chart from that perspective, no, not really. We've got some room to, consolidate, to move sideways, to chop around a little bit before we break the uptrend. And that will keep you from, constantly flipping between, oh, I'm bullish, oh, I'm short, oh, I'm bullish, oh, I'm bearish, and, getting chopped up when all we're doing is moving sideways for a couple days, and then, even here, a 3-day pullback doesn't really signal a let's get short. If I were to draw up a retracement like this on the short side, because the swing low is back here. So rather than trying to get short, I'm looking at adding to and getting long. So I hope that was helpful. If you have questions, feel free to drop them in the comments below. And if you liked the video, give it a thumbs up. Thanks, and have a great week of trading.